Hi traders, you are welcome back to the Forex Geek channel, and I especially welcome you to this breakdown of points of interest trading. In this video, we are going to cover what points of interest are, how to identify them, and how to use them effectively in your trading strategy. Okay, so let us start with the basics. What is a point of interest? Well, a point of interest, or POI for short, is simply a zone in the market where price is most likely to react. Okay, so these are not random levels. They are areas where institutions have placed large orders, where liquidity sits or where imbalances exist. Just think of them as magnets that draw price back before the market makes its next move. Okay, so why is this important? Why is this important? Because without understanding points of interest, many traders end up chasing price or entering at the wrong levels. Institutions leave behind footprints in the market, and these footprints often show up as points of interest, or POIs. So by learning to recognize them, you begin to see where the market is preparing to turn or continue. I'm going to be giving you an example. You can see that price was initially making higher highs and higher lows, right? Here, right? At some point, price broke below, giving us a change of character. Now, because of that break below, we have a bearish order block established. So now, this bearish order block that was established here now becomes a point of interest. So I hope you understand the concept. This bearish order block that was established here now becomes a point of interest because we are expecting price to come back to this zone and react around here. All right. Okay. So, it's going to be the last bullish candle before the impulsive move. Okay. So if you are getting the order block from the 5-minute time frame, it's going to be around here. If you want to streamline it, all right. Okay, but from the 15 minutes time frame, it's going to be around here. Okay. Yeah. So that's going to be our point of interest. I'm just trying to explain practically what a point of interest is. So once you've marked out your point of interest, just patiently wait for price to come back to that zone, and you see how price reacts around that zone. Okay, so how do you identify valid point of interest? Not every supply or demand zone qualifies as a strong point of interest. The best POIs usually form after a significant move that, breaks structure or sweeps liquidity. For example, if you see an impulsive move that clears highs or lows, and leaves behind an order block like this one we did here, that order block becomes a strong point of interest. Similarly, on field imbalances that are gaps, which are gaps between candles, they're often acting as point of interest as well because the market naturally wants to rebalance those areas. Okay, so once you have marked your point of interest, the key is learning how to use them. Right, this does not mean entering as soon as price touches the zone. Instead you just have to wait for confirmation. You look for signs like rejection wicks, smaller time frame structure breaks, or a clear reaction within the POI. This approach allows you to trade with precision instead of guessing. Okay, So patience plays a huge role here. Sometimes price takes hours or even days to return to a point of interest. The discipline is to wait, you know, patiently. And that discipline to wait is what separates consistent traders from those who keep forcing trades. So by sticking to your POIs and ignoring market noise, you align yourself with the flow of institutional trading. Okay? And make sure that you always prioritize your risk management. It is very important, right? Do not trade with an amount you cannot afford to lose, and try not to risk more than 1 to 2% of your account balance in a single trade. And then now, when you are trying to enter a trade, make sure you get your confirmation first. Like I said, price, we're expecting price now to come back to test this zone, right? And then mitigate the order block and then start coming back down, right? So now, where do you target for your take profit? Where do you target for your entry? So once you get your confirmation, make sure you get the confirmation first. After your confirmation, you enter. Your stop loss can be above that zone, completely above that zone, and then your target can be around the reversal point, that area where price reversed. Okay, so that's where we're going to be targeting for our take profit. So it's as easy as that. Okay, so to wrap this up, point of interest trading is all about identifying the key zones where price is most likely to react and then waiting for confirmation before entering the trade. So this gives you a structured, disciplined approach that keeps you from chasing trades and puts you in line with smart money. Okay, I hope that is understood. So to wrap this up, point of interest trading is all about identifying an important zone that is likely going to give you a good trade, right? Just to say it in another way. So if you found this breakdown on POIs helpful, make sure to click the like button and subscribe to the channel for more trading strategies and smart money concepts. Drop a comment below and let me know what topic you'd like me to cover next. Thank you for watching, and I will see you in the next video. Happy trading.